Hello friends, welcome back to the financial class. Now I will introduce you to the new interesting topic about financial management. In this video, I will explain you about managing current asset. Okay, first thing first, what does current asset means? Current asset is a balance sheet account that represents the value of assets that are reasonably expected to be converted into cash within 1 year in the normal course of business. When we talk about current asset, one of the most important things that we will talk about is cash. So now let's talk more about cash. Friends, we certainly know that every company must have cash holding. But what is cash holding actually? Cash holding refers to the amount of cash and cash equivalent that a company retains to meet its short-term financial obligation. Cash and cash equivalent include physical cash, fund in bank accounts, and liquidity investment that can be quickly converted into cash. But Olin, the cash doesn't earn a profit, right? So why they should to hold it? That's a good question. It's because the company doing transaction must have some cash to operate the production process right. Second one, precaution. Safety stock, reduced by line of credit and marketable securities. Third one is compensating balances for loans and or services provided, and so much more. Well, I give you the overview to better understand of cash cycle. This is a simple example of the cash operating cycle. When we have cash that can be obtained from equity and loans, as a businessman, of course, we will spend it to get inventory, right? Spending inventory with cash can be in two ways. First, by payables or credit if you don't have enough amount of cash, and second, by buying directly with your cash. After having inventory, of course, we will sell our inventory, right? Well, in the sales process, we also have two ways to choose from. First, by directly selling in full, or usually we call it cash, or we sell with a receivable system which will eventually return to us as capital in the form of cash. Well, friends, we need to control this cash turnover cycle so that there are no overheads or minimize the company's expenses from excessive and unnecessary things. The process of planning, organizing, and controlling cash inflows and outflows to optimize liquidity, minimize costs, and ensure efficient operation is called cash management. It focuses on ensuring that the company has the right amount of cash at the right time. So that's why understanding the cash management is important. Think of cash holding as the stock of money the company keeps for smooth operation, while cash management is a strategy used to decide how much cash is needed, when, and where it should go. Understanding the relationship between cash holding and cash management is crucial because these concepts complement each other in financial operations. Now, let's move into cash budget. What is cash budget? Cash budget is a financial plan that estimates a company cash inflows and outflows over a specific period such as a month, a quarter, or years. It helps business manage their liquidity by forecasting whether they will have enough cash to meet obligation or if they'll need to arrange financing. Now, I will give you an example how to calculating of net cash inflow in cash budget. In this table, we will calculate the cash budget of Olivia Corporation, and we will know their net cash inflow, whether they get surplus or deficit at the end of the month. First, look at the January period. We assume that the company have total cash inflow with $50,000, and in the other hand, they have total cash outflows with $40,500. So, the net inflows is $9,500. But let's move to look up in the February period. We assume that they have cash inflows in $40,000 with cash outflows in $51,700. You guys can see the difference, right? In February, the company has decreased in collection from the credit sales, which is they only gain $10,000. Maybe the account receivable have decreased and struggle and so on from customer. Meanwhile, their expenses too much in purchase and wages, so it makes them into lose the net cash inflows. Next table, we need to calculate and provide their company whether they will be surplus or deficit. We see here now that in January, Olivia Corporation have their amount of cumulative cash more than their target cash. But unfortunately, in February, they have a cash shortage which led to the amount of their cumulative cash is less than their target cash. From calculating of the table, it means in January, the company has a surplus of cash after meeting all its forecasted expenses. This surplus can be invested and used to pay down debt or save for future use. But in February, the company runs in deficit cash. By preparing a cash budget, the company gains clarity in its liquidity position and can proactively manage any cash surplus or deficits. Alright, that's all the material about managing current asset. I hope after watching this video, you guys can understand clearly about what is current asset and be able to distinguish between cash holding, cash management, and cash budget. But also you can provide in calculation, of course. So that's all from me for today. See you in the next video. Bye bye.